economic center of gravity is moving gradually further and further east, if you want, or to be precise, southeast. You are going to see even more of shifts in terms of economic activity. Trade corridors are going to be a prominent factor in this context, and that's going to happen now, the next couple of years, the next decades, because the direction of travel continues to be clear.
The geography of trade is shifting, and it's not just about tariffs. Over the past few years, a variety of factors have prompted countries across the world to explore new corridors and partnerships. Nowhere is this change more evident than in Asia, a region that has become central to the world's supply chains and financial flows. The latest upheaval, of course, comes from the US administration's tariffs, and they've got many asking where globalization might go from here. Today, we're talking about how this shift could impact the world economy and where Asia sits amid it all. I'm Michael Steen, and welcome to another episode of This is Deutsche Bank, the podcast for the news and trends shaping the world of banking and finance. I'm very pleased to be joined by Alex von Sumulen, CEO of Asia Pacific, Middle East and Africa, Europe and Germany, and management board member here at Deutsche Bank. Today is October the 24th. Let's get started. Alex, welcome to the podcast.
Thanks for having me.
Now, I just mentioned your role, which is very long, and we're going to focus, however, to start with the first part, which is Asia Pacific. I guess some of our listeners might be surprised to learn that we've actually been on the ground in Asia Pacific for 150 years. Our first two foreign offices anywhere in the world were in Shanghai and Yokohama in 1872. So to start off, what was a German bank doing opening an office in Asia back then?
It sounds unusual, doesn't it? I think the background is really fascinating. So the bank was founded 2 years before that, 1870, in Berlin. And the founding purpose and the reason for that was, obviously, the world was a different place. Geopolitical frictions squared, many wars on a regular basis within Europe, little friendship and the like. However, you had the first number of large industrials. The industrialization was kicking off big time. And these companies were indeed internationalizing. Siemens being a prominent example. And they were moving eastwards. They went to Asia. Now, wherever you go, you need money, you need somebody to take care of your financial activities. What they were missing was a bank that they could operate with, both in their home market and in this case in Asia. And that was really the founding purpose. It was industrials in Germany at the time saying we need a bank that helps us globally. And this is why indeed the first foreign branches were not in Paris or London or other places where you might have expected it. They were in Shanghai and in Yokohama.
Wow. Now, doing business across continents is obviously very different now than it was in the 1870s. But and the globalization, particularly in the last few decades, has completely changed the shape of the world. So what is the role these days of Asia Pacific and where do you see the global economy developing from here on?
So the region Asia, and I would include also Middle East and Africa for that purpose. Over and above, obviously, the strong population and rising population that the continents offer, also has a rising level in terms of economic relevance. India, as an example, it's going to be the third largest economy in the world by the end of this very decade. So economic center of gravity is moving gradually further and further east, if you want, or to be precise, southeast. And as a consequence, GDP growth coming, population in those markets, in many of those markets, gradually becoming more relevant also from a demand and consumption standpoint, will also activate more clients from Western Europe, from the Americas and the like, to, in a way, build out their capabilities, their products, their services into the region. We see that happening already. But you are going to see even more of shifts in terms of economic activity. Trade corridors are going to be a prominent factor in this context. And that's going to happen now, the next couple of years, the next decades, because the direction of travel continues to be clear. That is not to say that Europe obviously continues to be extraordinarily important And if anything, because of the economic growth that we're seeing in markets like Asia, and then also the geopolitical frictions you mentioned that are becoming a more dominant theme for our generation, will also hopefully reactivate more and more European politicians and economic leaders, for that matter, to make sure that the continent does become more competitive in domains where we lost a bit of ground recently.
And so that's the challenge for Europe then. And but in terms of trade flows, just to tease that out a bit, I suppose the very big picture change there is that if before you saw a region like Asia Pacific as say a production center and the trade is flowing one way, there's a much greater diversity there now, because it's also, as you pointed out, becoming much richer. And that means it is also seeking links to other parts of the world.
It's becoming much richer. It's becoming more relevant, and learning certainly from the COVID saga, and also because of geopolitics and the lessons learned from the last couple of years, is that rather than just optimizing your supply chain in terms of price point, you also need to become more resilient as an organization, which is why a lot of industrials are looking for a second, a third, a fourth manufacturing hub. Again, you're looking obviously for markets where you have the critical mass, where you get the quality at the right time. And this is why new markets and smaller markets in the region become more relevant. Again, China plus one, famous buzzword, but it's very true. And that is not just because Western companies want to shift out of China. It's mostly because they're looking to an additional capability while keeping China. And in addition to that, you have a lot of Chinese companies themselves which are trying to push out low-level manufacturing capabilities in particular, because China no longer is the low-wage market that it used to be in the past. And this is why you see some markets in Southeast Asia, as an example, but also in India, becoming more relevant, both from manufacturing and going forward also from a service standpoint.
If you look at our role there, you mentioned the historic one was essentially we were accompanying German industrials who were looking to do business in Asia Pacific. What's changed? What's our role now? I suppose some of it continues. We know that. So that's. But what else has come to be added to that?
So obviously our product universe as a universal bank has broadened, right, across all the vectors, from private bank activities into corporate bank activities, investment banking, as well as asset management. But the foundation, in a way, of supporting clients, be it corporates, financial institutions, individuals, family offices, and the like, is kind of the same. And one of the key features of Deutsche Bank is certainly the broad network that we have operating in so many countries, so many continents, because, and in particular in a world that is becoming somewhat more complex, supply chains are migrating, new markets need to be opened, you might want to exit one or the other locations. Both the sending and the recipient location, you need banking services. And ideally you have a partner who can operate in this market, the next market, and another 10 or 20. And that's exactly what we have. And that's a big differentiating factor for Deutsche Bank with its global platform versus a large number of very, very strong, very powerful, very meaningful, purely domestic or purely regional banks. And in a world where we are seeing much more activity in terms of migration and velocity of trade and financial flows as a consequence, that's actually a beneficial environment for an organization like ours.
I see. Does that mean then that coming back to Europe, that what's the sort of added value of being European, or in this case German, there, and what's the role there for us as a German bank, would you say?
So when you look at this from the perspective of the year 2025, I would say there's two aspects. One, being a European domiciled bank, a German domiciled bank in particular, is very helpful because of geopolitics. I think Europeans are being seen as much more reliable and long-term relationship-oriented. And for us specifically as Deutsche Bank in Asia, one example that many of our clients in the region note regularly is that when the Asian financial crisis hit in the late 90s, most of Western organizations ran away, only trying to come back a couple of years later. Deutsche Bank stayed very solidly in all the markets in Asia Pacific, and people recall that. So whether that is because of a weak point in the economic cycle or a geopolitical friction and the like, the risk of a European organization to walk away and run away from a relationship is being seen as less likely than that of others. And that's a very significant USP for us at the moment. And the second factor, and this is why I said in the year 2025, is also as Europe aspires to become more commercially relevant again and is trying to push forward an economic growth story. And we're seeing this very more actively in Germany already with the fiscal stimulus that is coming and hopefully a lot of private capital following. Europe and Germany specifically are being seen as attractive again for many investors. This is going to be a long journey. We know that. Again, Germany is kind of taking the lead. Other European countries probably have less fiscal capacity compared to Germany and the 500 billion that are in the process of being printed. But that even more so will require private capital to be short into Europe. Investors around the globe do look at it. And why do they look at it? Well, first of all, we're seeing a pro-economic growth agenda from European politicians that we haven't seen in a long time. The second aspect is obviously money, capital, resources always look for safe havens. And in the very, somewhat more disrupted, also politically more disrupted world that we live in, Europe is continuously being seen as a safe haven. And you can take this forward to a buzzword that this keeps arising quite often is the theme of de-dollarization. Whether you believe in it, whether you think it's fast or medium to long-term play, in any case, there is a need for diversification of capital. And again, Europe and the euro in particular are already a beneficiary in that regard. Notwithstanding that it obviously has countering effects as well. A stronger euro will obviously impact the more export-oriented industries. But at the end of the day, being the safe haven, being a location that shores up more capital from interested parties around the globe is a theme. And we as a global bank can help both with the inbound and the outbound activity.
And that's that big shift. So it's also investment coming from outside the European region, maybe Asia Pacific, maybe the Middle East, maybe anywhere, the global south even, I don't know, coming into Germany.
And we've seen this. We do expect and hope for a lot more. I say that because I think there needs to be, in terms of this agenda, the political agenda that is being set, there need to be several chapters. The first one was what I would call the fiscal stimulus from the government itself around infrastructure, obviously defense investments that are needed. Numerous reforms are needed. That is what private capital is asking for. And assuming that is going to become a reality in the coming quarters, coming years, we'll gradually see more private capital coming into Europe and first and foremost, probably Germany.
Okay, and the mission there is to be there to help facilitate.
And we want to facilitate that, but again, this is going to be a gradual approach. It's not going to happen overnight, and a lot of money is being put on the sidelines. You see that also in terms of development of interest rates, Bund levels, and the like. Most recently, the money has been parked in highly liquid assets. You also see that reflected in all-time highs in the stock markets. The illiquid, the utilization in terms of building new factories, building capacities, investing into private organizations is the next stage for which many investors, many companies wait for further reforms that activate further economic growth in Europe.
Okay. It's going to be fascinating to watch. Alex, thank you very much for stopping by today and talking to us. Before we let you go, we do always ask our guests one question, which is, can you tell us one thing that you're dedicated to in your daily life?
Well, daily life defined as private or from a business point of view or both. I think one word I would probably use is integrity. I think, everyone has the right to be what they want to be. But I think whatever you do and however you want to do it, you need to keep integrity. And people do sense that. And the smell test needs to be always withstood. And I think integrity is a very key factor in terms of differentiating also those people that you want to work with, live with, cooperate with. And it's probably more than a buzzword and is probably somewhat underestimated in terms of relevance sometimes.
Okay, thank you. Links back to the point you were making about the bank not leaving during the Asian crisis, I guess.
That's right.
Thank you very much, Alex. And thank you for tuning into This is Deutsche Bank. If you enjoyed this episode, please do subscribe or leave us a comment and let us know what you'd like us to cover in any future episodes. We'll be back soon. In the meantime, take care und bis bald.